Hi, this is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight is broken into three segments. You have the Trade Spotlight futures, Trade Spotlight commodity options, and Trade Spotlight future spreads. This is Beyond the Spotlight, a video series that spotlights 2 or 3 markets that may become trading opportunities for this week. This week begins with Monday, September 23rd, 2019. Before we dive into the charts, please pause the video and read the disclosures so that you understand the risks involved with futures and commodity options trading. Quick look at what the email that is delivered to you looks like. This is for the Trade Spotlight spread segment. You'll see the image in the top left corner identifying which segment it is. You'll get a write-up on the thought process of the trade so you can trade and learn as you go. You'll have the precise entry and exit levels so you know the risk-reward parameters, any other pertinent information such as margin requirements, and you'll see a chart of the trade in question. All right, let's take a look at our first chart for this video. This is the December 2019 mini Nasdaq chart, and a recommendation was actually sent Friday afternoon for Sunday night's open or Monday's open, looking to sell this contract on a break of not only these lows, but this lower trend line and these moving averages that you see here. And what I have drawn off here is a head and shoulders formation. You have your head, which is the 12-month contract high. That's the July 24th high of 8,072. And then you have your left shoulder and right shoulder. Now this formation is a trend reversal formation. You can see in the MACD is showing the trend is starting to angle downward. Typically you sell on a break of the neckline, but this is such a steep line and it's about 430 points from the current market price. So I'm anticipating the breakout down to this level by selling earlier, but still waiting for confirmation of these lows and this trend line to be triggered first. You can see there is momentum to the downside. This is the stochastic indicator, and that downside momentum is building. So we want to get into the position before we get down to this lower trend line. That's actually where the first target is for this trade, near this lower trend line and the 200-day moving average at 74.01. Stop losses is above halfway of Friday's trading range. So again, those details are in the email that was sent out Friday afternoon. There was also an email through the options segment with an option trade. You know, if the risk or the margin requirements are too much in the Nasdaq market, you could turn to the options. There's a recommendation for a put spread. All right, let's move along to our next chart here, and that is the December 2019 30-year bonds. And what I have shown here is a 1-2-3 formation. So we have the number 1 point, which is the 12-month contract high. That comes in at 166.25 from August 28th. From there, the market sold off, created a pivot point low down at this recent low, which is from the 13th of September at 157.17. So now we're looking for the market to rally back farther. That's why I drew off this area here. I'm looking for more of a push higher, because you can see with the stochastics indicator, there is still strong momentum to the upside. So I'd like to see the market continue on, carry up, perhaps through this 20-day moving average at 162.24 or higher, as long as it doesn't take out the number 1 point. And then I like to see this indicator hook back over to the downside to set up a shorting entry opportunity. Typically you sell on a break of the number 2 point, but if there forms a strong lower trend line here, we may be able to get in at a higher price, a better price. Right now the trend is, it's relatively flat. It has a little bit of downside momentum to it, maybe turning over to an upside momentum trend, but it's pretty flat right now. We'd also like to see that hook downward as well to take a short entry. Downside target would definitely be the beginning of this Fibonacci retracement, this big rally that we just went through. That low is 152.04 from July 12th. Stop losses will wait to see where the market begins to roll over, but there should be some potential pivot points up in this level. So stay tuned. That could come as early as this week. And the final chart that I'd like to speak about in this video is the December 2019 Chicago wheat futures market. So I also have a 1-2-3 formation drawn off, but this time it's a 1-2-3 bottom formation, meaning the number 1 point is on the lower end, and we're looking for a trade to the upside. This is a trend reversal formation as well. Again, trend looks flat, looking on the MACD indicator here, so looking for that to strengthen before getting into a long entry. But also like to see the market roll down into this level, perhaps where the 20-day moving average is at 476 and 1/8 cents, or these lower lows around 470 even, for a potential hook down in there, and then a hook back up with the chart and this stochastic indicator. As long as we don't take out this number 1 point, that's probably where the stop loss will go, below this number 1 point, which again was 450.5 from September 3rd. Upside targets, we've got a few. Actually, you got the 50% Fibonacci retracement at 509.25. That's also the 200-day moving average. But we can also look for the market to get back up into this level as we approach the fall. So stay tuned. That could also materialize this week. If you have any questions on any of the charts I discussed, or just the markets or trading in general, feel free to reach out. My local international number is listed here. The work cell phone's listed, and also the toll-free number. You can also email me directly at tradespotlight@danielstrading.com. If you're not yet a subscriber, I encourage you to do so. This is a free service to clients of Daniel's Trading. If you're not a client, you can get a free 90-day trial. That should be enough to see what we're up to here. You just go to danielstrading.com, go to the Advisories tab at the top. Under Technical Indicators, you'll find the Trade Spotlight, and you can read more about it. You can read some recent posts and click the orange button to subscribe free for 90 days. So thank you for taking the time to listen. I hope you found something valuable in this video. Happy trading.